Hey guys, welcome back. Welcome back to another episode of Forbes Tech Magazine. It's your host Lewis. Hope you guys are having a great day today. Today is January the 10th, 2019. Uh, Pouring through this month pretty quickly. Hopefully, you already made some good money so far. If you haven't, stick with us. Hopefully, we can help you with some tips, some tidbits that help you with that. Before we get into that, though, we want to get into this disclaimer. Disclaimer goes a little something like this. Any and all information that's shared with you by Forbes Tech Magazine should be considered to be informational and educational purposes only. Um, if you are in need of financial advice, our suggestion to you would be to seek out the assistance of a licensed, competent advisor. So, with that being said, let's go ahead and get right on into what you came here for, and that is to look at some trades. All right, I'm just doing a little bit of housekeeping right here at the moment. Sorry. Okay. Oops. Okay, here we go. This is our Aussie US dollar pair. We'll get into that in just a minute. Let's go ahead and cover the Great Britain pound pairs. And before we get into our other pairs that we were looking at during the US trading hour. Now, this right here is the Great Britain pound zillion dollar. And as you can see, it is in an upward trend, but right now it's currently moving down into the side. Had a bit of a pullback yesterday. Remember we said that we were looking for a buy signal if price crosses above or across this downward trend line. Price did cross this downward trend line, but then it started proceeded to go down some more, right? So what we're doing is we're having what we call a retest, right? Price crossed above it, right? Got into the buy zone, right? But then price then began to retest it, which the price is looking to bounce off of um, that trend line. So this is still, in my opinion, considered to be a buy at this time. The one thing you do want to pay attention to though is that price travel pretty far back in this pullback, this latest pullback, and almost goes to the blue, right? So that would make me think that our take profit, which this is where we put it at here. I'm sorry, our take profit, which was here originally, I'll probably want to pull it back to about here. Just for now, because it seems like there's some weakness in that price. The price would then push up and then close above this support resistance line. You may look at putting target up here, but for right now, I would just go with placing my take profit to about here. Right? So if you're already in the trade, that's where I would probably adjust my take profit to. And if you haven't entered the trade yet, that's why I would wait to put my enter my trade in at. Now, when I say this is a potential buy, I still say it is. What's going to happen though? You're going to need for price to cross back over. You need for price to cross back over onto this zone here. What I think is going to happen, price is going to retest this trend line before it starts to push back up again. How far down it's going to test the trend line, I don't know just yet. Hopefully this is going to be a bottom here, right? And that should allow for price to push back up, cross above this trend line, and then push back up to the target. We'll see. And just remember, keep in mind that if it goes below the A, then you should be out of that trade because that means you got a full-on reversal taking place. Okay? Let's look at the next one. This is the Great Britain pound, Canadian dollar. Looks like we got it pegged for downward descent. This right here is our target. Because here goes our A or B. Looks like our C was here. And so the push is here. Looks like price did exactly what we said, which was going to bounce off of that trend line. Remember we said, not trend line, but that support resistance line. Remember we said put our price target here. So that way, if price were to hit this, that more than likely price is going to hit this support resistance line and bounce back up. And then what we're going to be looking for is the continuation that push back through that support resistance to the to that D extension. So looks like we're in the process of starting the process of completing this Fibonacci extension. And then from here, whether or not it's going to continue to move down or if it's going to start a reversal and start going back up, that's what's to be remain to be seen. Okay. But it looks like it is starting its next move potentially down. If you look right here, right, this is the uptrend. Price below the uptrend. Price is now going downwards. Get some downward momentum. It's probably going to retest that support. Maybe push through this time and hit that D extension. So we'll monitor that over the next 24, 48. See what happens with that one. That particular pair. I think there's another one. This is the Great Britain Pound Japanese Yen. We talked about this right here a little bit yesterday as well. Here you have the hey, Mr. Zero Fear. How you doing, man? Good to see you tuned in. Good to see you tuned in. I'm doing well. Thanks for asking, my friend. Thanks for asking. We're just going over some of these pairs. Today's going to be kind of a short day. I'm not really kind of feeling under the weather a little bit today, so I got to get some more rest in. So I'm kind of going through this a little quickly here, but you've been tuned in, you've been a regular viewer, so I know you know what's going on. This one right here, the Great Britain Pound Japanese Yen. Once again, we talked about this yesterday. You got kind of a little confluence going on. You got the downward trend, and then you also got this support/resistance horizontally going across the screen here. So it really kind of implies there's going to be a lot of resistance. Tough maybe to break through for this particular pair to hit that D extension, but trade with caution. If price is able to break through these two barriers, then definitely lock in that take profit. Right here at that D extension. Okay, but right now, as you see, price is coming up, is bouncing off, or not even. It's coming close, but not hitting exactly that downward trend line. Right, still showing its own little downward momentum, but that's not. I wouldn't be super concerned about it at the moment. And the reason being is because if you look at where you're at on your fibs, you're still at a 2.36 retractment, and you haven't even hit it. You haven't even came down that far yet. So right now, it's probably what it's doing is the market's taking a little bit of breather. It's going to bounce up, and then it should press through, but we'll see. And like I said before, I think a lot of it is just that the market is trying to get its direction for the Great Britain Pound. I think a lot of that's going to be based off of what's going to happen over the next couple of weeks when they're going in and start doing the voting and all that good stuff. Trying to figure out what's going to happen next with that currency. Okay. But for right now, probably will stay out of this pair. Don't really see a trade in this right here today. Remember, price has to cross above any type of downward trend line for it to be considered a buy, and it hasn't done that yet. It's kind of adhering to the downward trend line, so I will stay out of it just at the moment. It's not quite ready to get in there yet. This right here is a Great Britain Pound, Aussie dollar. Once again, we got the fibs on this right here. There's an A, here goes our B. We're looking for the C pullback. This looks like this is the C right here. It's the pullback in the red. That means that our target is going to be down here, our D extension, which is in the red. As you can see, we looked at our counter trend line breaks, right? Price broke below that counter trend line, so therefore, we need to, go ahead and sell an opportunity so you can sell. One thing I always caution everyone about was this right here. This is your horizontal support line. Told you that price, set your target, moves up here to the support line. Right, just because price has a tendency to U-turn around supports and resistance, and that if price was able to push through that support, then looking maybe to potentially buy or sell into this the weakness, putting your target back here at the D extension. It did break through and that support, and we did get a break of the counter trend line. Right. Fortunately, though, price pulled back through. Price went back in and retested not only that support, but also retested that trend line. But then, price went on to break back through it again. part of the process. Whenever you got those U-turns right there, you're going to get a lot of volatility because you got buyers and sellers on both sides trying to prove a point, trying to see who's right, who's wrong. Eventually, somebody's going to have to yield. And in this particular case here, it looks like the buyers look like they're kind of slowing down a little bit because we pressed back through that support. And if I drew another trend line here, this is right here, you'll see that price has also pressed back through any type of downward trend line. So back on the sell side of things again, if you choose to go in there and sell, but just kind of keep in mind how much profit you're looking at versus how much risk you're taking on. It was about 57 pips. You're past the B, so you could go ahead and put your stop loss back over here. In that particular trade, some other folks may, but that would not be my cup of tea. So I would hold off on doing this one. Some of you may want to go ahead and do it. It's probably going to be pretty easy money. I mean, it should over the next 3, 4, 4 weeks play out unless something out of ordinary happens. But for the most part, you probably be pretty. It's a bet that you can make. Here goes the this is Great Bear Pound US dollar, right? This right here we're looking at some upward momentum. Here goes our target. Price has slowly been pushing its way back up. But nonetheless, it's been making progress. It's been pushing its way back up. So definitely a pair that you can get in if you want to make a purchase on this one. You could. Just be extremely cautious. Once again, probably going to put my stop loss back here below the C for this particular pair. I'm just going to be extra cautious when trading this one if you decide you want to trade it. It's 95 pips potential gain, and that is 63 pips potential loss. So your risk to reward ratio is good for this particular pair if you decide you want to try it. Typically, me, I always put my stop losses below the A, but hey, right here below the C is not bad because it did cross the B, not by much, but it's pushing. Like I said, 95 pips. If you got a standard lot, that's $950. That's not bad. Okay, but you're risking about $600 to get it. So you got to kind of keep that in mind. All right. Next thing we're gonna look at. We're gonna go back. We're gonna look at the U.S. Canadian dollar. Right, so these are one of the ones. So I think last time we talked about that we had the A, we had the B, right? Because it did complete that other previous Fibonacci move down. But then what we were looking for was the C retractment, so that we could determine where our D extension was going to be. So it looks like it retracted very shallow. This should be our C right here. Looks like price is still trying to retract some more. Maybe it came down a little bit, right? And then price began to push back up. And so now what we're going to do is we're going to kind of see what's going to happen. So what happens? We've got some strength in the U.S. dollar. I think part of it is just really because of the whole tariff, optimism about the tariffs agreement with China. That meeting has since concluded, and looks like there's been some optimism that's coming out of it. And so we will see how that plays out for U.S. dollar strength. That may just kind of last until the weekend before we start to see a turnaround and we get some weakness in the U.S. dollar, and then we go ahead and pull back towards our take profit. But we'll see, right? Don't have this trade on yet. But what I'm looking to do is to possibly get into this trade after I cash out on the trade that I'm in right now. So that's why I'm really kind of monitoring this really close, looking at this pullback. Because if we get a little bit more of a steeper pullback, that's going to sweeten the pot as far as what our take profit is. Currently, right now, this right here is the Aussie US dollar. See, we're in upward Fibonacci swing. A couple things I got here on couple of lines I got here on the chart, because I'm not trading out of this platform. I'm trading out of another platform, right? This one here. I'm just trying to mark it here on this platform, kind of let you know where I'm at. So this right is, of course, the stop loss. My this right is supposed to be my entry, but my entry is actually off. It should be a little bit lower. And then, of course, here's my take profit, which is right there at my D extension, right? But this is just kind of a little visual, kind of help me see where we're at in the trade. And how's it going so far? So I could bring up my stop loss if I wanted to right about here, which would be the C. But I'm not. I'm comfortable with where it's at right now. I'm going to leave it there for the moment. Price is about $64, 65 pips away from our target. So we're going to leave that in play, and we'll see how it plays out over the next couple of days here, over the next 24 to 48. Hopefully we will take profit before the week is out, and in that way we can go back and look at what we have, potential that we have here in this U.S. Canadian dollar. Because what I'm hoping is, well, the thought process would be that the dollar, if it does push back up, right, then we can get in and then ride some of that Canadian dollar strength back down. Let's see if we got anything economic-wise on the calendar for the Canadian dollar. And this is for, oops. Yes, this is Thursday, January 10th. So we do have some news releases coming up at 8:30. We got the housing price index, building permits. So we'll see how that plays out. Then of course we got the U.S. dollar initial jobs claim, and we got the continual claim. So those are pretty big numbers too. It's going to be coming out in the U.S. Ooh, and then the Fed is going to be speaking today. That probably should give some added weakness to the dollar, potentially. So it may not really help me out for this particular trade here, because that may go ahead and send that trade to this downward spiral, that price target. But it could definitely help me out with this particular one here, because it would give some more added weakness to the dollar, because it's not going to increase the rates. Once again, could propel this Aussie US dollar up higher. So we'll see. We'll see. Right now, like I said, this is a simple account. Not much in it. Got a total value of what, 200 and some odd dollars in it, and right now we got $11.82 profit. It's small, but I want you guys to understand it's small for a reason. And what we're attempting to do here is we're going to look at the power of compounded interest over time, and the object is to start out with a small account and build it up to a larger account, a significant account, by making smart trades, not being greedy, and just letting it build over time. Anyway, guys, listen, that's all I got for today. Right, I am about to get out of here. I know it's not even 30 minutes yet. I apologize, but I'm really not feeling the weather. I'm really feeling under the weather today. But anyway, I'll see you guys in another 23 hours. Take care.